Hello, traders. This is Chris Keenan. The week is over. It was a difficult at best week of trading. Most of the pairs, well, the euro and was stuck in a very tight range throughout the majority of the week. We had the Aussie going up. We had the pound moving higher and the CAD following and the yen going down and New Zealand hesitantly following the Aussie. But all in all, we didn't have any marked moves or pullbacks that would make it easy to continue to scalp pips here or there or ride a major trend in either directions until today's trading. But that was a news-based event, which makes it kind of difficult to catch the trade, or you can't really predict it before it happens. But let's take a look at the first pair of interest. We'll go through all the majors and maybe even look at a couple of the Japanese yen crosses. And see how everything's setting up for the beginning of next week. As you can see, nothing really fundamentally has changed in the Euro USD. It seems like we had a giant breakdown today, but as long as the pair remains above this 121.50 level, we haven't had a trend shift. We've just basically moved to the bottom of the range. Now, it's not good that the pair is going to close at the lows of the week, but until we have the open on Sunday, or I guess the beginning of trading on Monday in Asia, we can't predict that the pair is going to keep going. It could easily bounce right off this level. As you can see, it rode this trend line higher throughout the majority of the week. It broke through today after we had a report that the ECB is going to stop taking Greek bonds as collateral. And there was also news out of Spain that they're looking for, certain regions are looking for bailouts. And this actually all happened about at 7:30, 7:45 a.m. And this pushed the pairs lower and moved risk lower with it. So heading into next week, though, like I said, we're going to have 121.50 as support to start the week out, and we're going to have 123.30 as still as resistance. Now, if we can get a breakthrough this 121.50 area, we could move down. Initially, there's another level of support right around 121.30, and that's the 50 fib from the entire history of the euro and its trading plan. But I would say if we get past the 121.50 area, we probably would see a move down. Well, not probably. There's a chance we see a move down to the next level of support, which is the 118.80 level. And pulling that level out was a feat in itself, because we have to go back almost 2 years to May 2010, and we can see that the pair moved down to that 118.80 level. And if we break that, we're in uncharted territory, and we could just continue to fall back. But right now, I would focus on that 118.80 level, and there could be quite a bit of resistance if we actually make it down to there. So, let's look at the next pair we're going to take a look at is the Great Britain USD cross. The Great Britain USD, as you can see, just like the Aussie, broke below the ascending trend line that it contained the pair. It was a pretty simple trade to make right up here after it broke resistance. Well, the R&R was pretty good to go short here at 157.20 and ride it back down. Or at least I would have probably just been riding it back down until the resistance. But it broke through the area, and it is Friday, so there's a good I've discovered that there seems to be a better chance for trend shifts and definitely continuation until the end of the day on a Friday evening. So we can see that it broke through the trend line. And so now we have what I would be looking for as a trader is, and I'm a little disappointed that it has continued to move this much. I would be looking for any pullback towards this ascending trend line to find new sellers, and that would be an opportunity to go short the pair, and looking for a continued move lower to the support level at 155.75 initially, and then maybe we can get a little bit of momentum to 175.45. Just ride the steps lower and eliminate a little bit of your risk each time. But if the pair keeps going down and just in a straight line, I wouldn't really have a trading plan until we get up to 155.75, and then maybe we can get a slight bit of bounce from that point. Now the Aussie, this is the one that started all the excitement out for us today. The Aussie USD actually tried to hold on more than any of the other pairs. It looked as though it was actually even going to bounce actually early in trading last night. And then at 5 a.m. it started to fall, and then when all the other pairs fell, in early New York trading, the Aussie held on. They made it all the way until about 11:30. Actually, maybe it was like 12:30 today, and a pair broke above this trend line. And now it's trying to do a solid. It's trying to actually rally back above it. If it did rally back above it on a 4-hour close, which we already have an hour and 30 minutes because it's 3:26 p.m., this trend would very well still be in shape, still be in play for a move higher, and that might be an indication of that we're going to get a rebound in the rest of the majors back up towards their past support levels and going into the beginning of the week. So this is an important area to watch right here. And I would wait until we have the open at 5 p.m. Eastern time on Sunday and see maybe how the first hour closes into the beginning of Asian trading before I would do anything with this particular pair, or just watch this pair. But I mean, there's still enough time where it could probably close all the way down at new lows. Let's take a look at the USD-CAD. The USD-CAD will move down lower. I was pretty gung-ho that this pair was going to continue to move down. I mean, it still very well could towards the 99.98 level because there had been, oil prices had been rising, and there had just been expectations for the Canadian government to keep interest rates moving lower for the next, moving higher, for interest rate hikes, moving higher for the next year or so on a tightening cycle. But then a poor CPI report came out today just hinting that inflation was lower than expected, and that actually caused quite a pop in the pair. And I was hesitant actually to go. I still wanted to short it because I thought we could get a move down lower after a short, like a retracement on the news. But I quickly took my loss on that trade. But now we have resistance back down at 101 and supports at 102. So not too much has changed. We're back inside that same tried and tried range. And I would see if we get a pop above 101.50, we could be moving up to 102. So basically playing the range is going to be how I'm going to set that up into next week. And similar with the New Zealand USD, it's back inside the range that it's been traveling in for most of the month, which is the 80 and 79.30, 79, actually 79.30, because this is an interesting, this trade where this pop happened around 5 between 5 and 6 p.m. Eastern time, and it didn't even show up on some of the Europeans. This is strictly an American lack of liquidity. It popped down 60 and then moved up 60. I never really heard any explanation for the move. So basically 79.30 into 80 is the area that I would be looking for this pair to be maintained in, but I would be hesitant right at 79.30. Might wait for a move down towards 79 just to look for any pop higher. I don't know. You have to play that move by ear. So I would say basically 79, 30, 79, and 80. Look for the pair to be contained at least into the beginning of the week in that tight frame. And the USDJPY, this cross, just I don't like it. I don't want to trade it. It just continues to move down. You can see it's in a descending wedge, and the pair just can't find any traction. But I would be very hesitant to buy this pair because there's always the chance of government intervention, and you don't want to be caught on the wrong side of that. So the only way I would look to buy this pair is if we actually have a breakup to the top of this ascending trend line, and then you could look for a move higher. But with risk off and U.S. government yields actually hitting record lows throughout this week, there's going to be a real I can't see strength occurring in the Japanese yen in the next couple of days. But I mean, everything changes eventually. So keep an eye on that particular pair if you want to for a pop of the descending trend line, and then maybe we can have a little bit of a momentum and a move up higher. Let's look at a few of the euro yen crosses. The first we'll look at is the euro yen, and that pair broke through significant support today at 95.60. I think we have to go back on a daily chart. I guess it's very much mirroring the euro USD, but it broke through the support level that the pair had bounced off in the beginning of June. And if we continue to break from that level, let's see where the next level of support we go. If we continue to get a move down from there. Actually, it hasn't been this low in 3 years. This is a historic low. So if we hold above this level, maybe get a daily close, we could see a move lower for a good chunk of pips right there. The Great Britain yen cross, on the other hand, is kind of interesting because it broke through out of a wedge today. And it broke out of the wedge and it broke out aggressively. So if I would look for that pair, if I'm maybe on a pullback towards the ascent, maybe towards the 123 level, to try to get short into it. And we have an initial target maybe towards the 120 area, down towards these lows. So that's a nice 250 pip target with a relatively small amount of risk. And the Aussie yen cross is actually almost a mirror copy of the Aussie USD that we have right here. The Aussie yen cross broke below its trend line today, closed below it. If we can get a hold below this close, maybe we can get another move down initially towards 81 and then a drift towards 80. The CAD yen cross, we might as well finish them all off. The New Zealand yen cross, we'll do that one first because I did that by mistake. Actually, let's go CAD yen. The CAD yen cross, similar thing. It had been a little bit of a wedge. It broke out down below, but I would wait first before making any action on that. See if we get a break below 77.30. If we do, then we can have a little bit of a move down towards the 76.50 area. And the New Zealand yen, finish it all off, round it. The New Zealand yen is sitting right on trend line. We don't have a confirmed 4-hour close, similar to the Aussie USD cross. I would wait for there at least to be a solid 4-hour or maybe even 2 4-hour closes before I would jump into this pair, because we could easily drift back higher and continue the slow gradual grind higher. So that's a rundown of everything that's happened this week. Going into the beginning of next week, like I said, I would keep my eye on the Aussie, see how it works, see if it gets a pop higher. If we can get a pop back above that resistance, this support level into the beginning of the week, we could see a resumption of the trend higher. But if we actually have a confirmed tight stop there, we could gradually definitely have a move down, and we'd probably have a lot of people net long, so we could get a little bit of acceleration on that. And the Euro USD, as we have to watch the 121.50 level, and the rest of the trades will basically take care of itself. New Zealand is basically going to follow the Aussie with risk, and the Canadian is going to be beating to its own drum beat, but it's going to follow risk in general. But you have to keep an eye on talk from their central bank, and talk like we're going to close towards the highs of the day. We keep an eye on oil prices and see if there's any more talk of interest rate expectations with that pair. And the yen, I wouldn't touch it unless we get a break up to the top side, and then we can make a move higher, and you wouldn't have to worry about interventions. All right, this is the daily close. This is Chris Keene. Everybody have a good weekend, and I'll talk to you on Monday.